Welcome to the September 2023 Las Vegas Real Estate Report. In this video, I'm going to cover the August Las Vegas area housing stats, current market assessment, what's happening here in Las Vegas for buyers and sellers, why is the inventory so low, mortgage rates, yes, they're still staying high. We're going to talk about that. Talk a little bit about distressed properties and some confusing headlines recently and new home opportunities that are still out there, still bringing maybe the best deals for buyers at the moment. Hi, my name is Jan O'Brien, along with my co-team leader, Cosmo Morabbi. We cover the entire Las Vegas Valley with our amazing team of experts. Make sure you reach out to whoever sent this video to you. We're here for all your Las Vegas, Henderson, Boulder City, Pahrump, and North Las Vegas real estate needs. All right, let's jump into the data. For the month of August, single family only is what I report here on this channel. The median sales price was $447,435. That's down 0.6%, actually month over month as well as year over year. And if you can see here, you'll see that we've been kind of coming down since a high of 482 of last May. Prices have come down. They flatlined here in the first part of the year. We saw them start to increase here starting in April, and then it kind of just stayed a little flat here, jumped up to 450 in July, and then 447, 435. We had 2009 units sell, and I just want to point out that's pretty much on pace for July of this year, down a little bit from the previous 2 months. So we're going to see what happens here as we move forward. 2641 new listings, down 34% year over year. New listings, as you can see for the whole year, they've been hovering somewhere in the from 22 to 20 at the high here, maybe right around 2617. Well, that's actually the highest we've had so far this year, 2641. Well, that's considerably lower when you look at the numbers from last year in the middle of from about March to September. The numbers were in the 3,000s, 4,000s, and that's where we are with new listings. The big story, of course, is availability. 3881 single-family homes were on the market at the end of August, which is 51% down from August of 2022. You can see the line here for August. In September, we peaked actually. So in August of last year, there were 7997 homes on the market at the end of that time period, peaking at 81. And then honestly, since then has been going down steadily. And this is just all about the interest rates that started to peak up here in May and June. So we're seeing a little bit more inventory on the market for the end of August comparative to July and really all the way back to March. Cash sales made up 26%. It's been hovering right around 25, 26% month over month for pretty much the last year or so. So here's another way to look at visually at where we've been since January of 2022 with median sales prices. I like to show this graph because it puts the numbers into perspective. If somebody's just saying, hey, the median sales price is 447, 435, what does that really mean to you? Well, it depends if you're a buyer or a seller. But if we go back here, you'll see we started the year out in 2022 at 435. We peaked, and this was a Las Vegas historical high for single-family homes at 482,000 back in May of 2022. The interest rates popped above 6% right in this time frame, and the result, of course, was this movement down on median sales prices, where we basically ended the year. December 425,000 was where we were in December of 2022, which basically 0%, appreciation. It flatlined for the first 4 months of the 3 months of the year. Then we had a little tick up here, 430, 442, and then 440. And as I mentioned, July 450, and now we're at 447. Where are we going? Well, if anything, it kind of feels like the interest rates are going to stay high. It's very possible that we'll see the prices continue to stay where they are, if not follow suit with what happened last year. And we may see a little bit of decline in prices as maybe less people. It's all about supply and demand, how many people want to buy and how many homes are available. And we'll be talking more about inventory. So we'll keep you posted on that. But we certainly don't see the prices increasing between now and the end of the year. If anything, decreasing. All right. So why is inventory so low? I want to go over 3 key points. The first one being home builders across the country underbuilding for 14 straight years, as this chart shows. These red years show the well below the 52-year average, which is right here. This has been talked about in the news for years, well before the pandemic and the adjustment of everything that has happened that has caused the craziness in our market right now, which led to the very low rates, which then led to all this appreciation that we've had. There were 14 straight years. There were 14 straight years where builders just didn't build the supply of homes that really are needed. So that is the very first reason. Now, good news, we're back on track. Here's the new year and we're back on track. And we definitely can see this in Las Vegas with the amount of new homes. There's 238 communities with tons more slated to come online through the end of the year and into next year. I'll talk more about builder opportunities, but the bottom line is it's going to take more than 1 year being on track to make up for this deficit that has been created for 14 years. So this is just one reason that inventory is currently so low. Next, obviously, the interest rates that people have enjoyed is creating what we're calling a lock-in effect. Many homeowners are just reluctant to sell their home because, check this out, 70.7% of mortgage rates, and these are at the time of origination. This doesn't even take into account people that refinance their mortgages when they were under 3%, which was a lot of folks. So over 70% of people with a mortgage in the country have a 4% or less mortgage. Look at this, less than 3%, 26% have less than 3%, between 3 and 4, another almost 45%. So why would you want to give up your current amazing payment at 4% or lower unless you have to move? So that's what we've been seeing all year. People are putting their homes on the market if they have to sell, or they just want to get their equity out, or they're moving, but they have to sell for specific reasons. Majority of people are reluctant to sell, and we certainly can understand why. So last thing that really is the uncertainty that many buyers and sellers have. And we see this all the time as we talk to folks that are considering moving here. Many people we've talked to this year have decided, I'm going to wait and see what happens. And that uncertainty is sometimes fueled by these clickable headlines and the media creating an unnecessary fear. And all you have to do is just go online, watch anything, apparently, especially if you go on YouTube. So many people are writing, all you have to do is go back anytime and you can see the housing market is going to crash. The housing market is going to, and these are literally things that I just pulled up to do this video. When's the housing market going to crash? A real estate reckoning is at hand. Is the housing market about to crash? What the experts are saying. So many people just read the headlines and don't have perspective for what's really happening or to compare it to other data. So you can understand why. It's just out there. So in the absence of trustworthy, up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt. So those are 3 big reasons why the inventory is so low. And obviously it's tied to the interest rates being high as well. So let's talk about that. So here is since August 24th, the last 30 or so days of interest rates. This is just reported by Mortgage News Daily. And this is just the thing I like to use as a gauge to report. And this is interest rates. This company checks lenders across the country and gets their rates on a daily basis with no discount points. So obviously you can get lower interest rates if you pay to bring the interest rate down, but this is the reported rates with no loan and interest loan discount points to bring the rates down. And red simply means they are ticking down. They ticked up, and the green means they ticked down for that particular day. And you can see that we started around the 24th just for this snapshot at 7.37, and we're at 7.28 as of 9/2023. And September 20th is when the Fed announcement came out on their recent meeting. And I just highlighted a couple things in their statement. Bottom line, they did not move the interest rate, the short-term interest rate, the Fed funds rate this time. Job gains have been slowed in recent months, but remain strong. The unemployment rate has remained low. Inflation remains elevated. It actually ticked up a bit. The committee seeks, this is the goal, right, to achieve maximum employment and inflation at the rate of 2% over the long run. So basically, they decided to keep it the way it is, but didn't say whether or not they're going to increase it. And it's all about what happens with the continued reports that come out on the economy, CPI, the inflation rate. Jobs reports are going to impact the short-term rates. But the mortgage industry looks at all of that and what's going on with mortgage-backed securities trading and what is happening with the 10-year treasury and makes adjustments accordingly, and usually will bake in rate adjustments well ahead of the Fed announcing, and is basing it more on other things like the 10-year treasury. All right, let's talk about foreclosures and short sales, also known as distressed properties. The local Review Journal just had a headline just this week as I'm recording this. Nevada leads nation in home foreclosures, report says. So this is an example of what I mean by, if you don't have the data to have perspective of what that means, and you just read the headline, or you're just gathering information from wherever your favorite channel is or your online source, and you don't get all the information to put it into perspective, it can be very misleading. So yes, is it concerning that Nevada, I've been here for 31 years and I lived through the Great Recession and the historical foreclosures that we had. And I don't see us ever getting back into that situation anytime soon. We're not in the same situation as back then when there were so many bad loans. We luckily have that in place now, that people do have loans that they can qualify for. That, of course, does not account for any kind of massive issues in the economy, people losing their jobs. But Nevada is leading the way when it comes to overall tick-ups of foreclosure filings in the entire United States. So what do we have in here? 1 in every 2,224 housing units in Nevada had a foreclosure filing in August, beating out Illinois, South Carolina, New Jersey, Delaware, according to the report. Nationally, there were 33,952 properties with a foreclosure filing, some kind of default notice. A 7% increase from July, but down 2% from 1 year ago. So in Las Vegas, out of that 2,224, 1 in every 1,796 houses was in foreclosure. Now, the big picture here for this is, and we have run into a few of these, and sometimes we recently ran into one where the consumer just didn't deal with it. And the consumer had the home seller had $100,000 plus in equity, but just had some things happen and wasn't able to make the payments. So that brings me to this right here. I'm not saying that there won't be people who have lost their jobs and can't make their payments, but it's not this massive amount of numbers that everybody's thinking. So if you're waiting on a foreclosure crisis to happen, it's not going to happen anytime soon. Are we going to see it uptick? Yes, very possibly. Again, depending on what happens with overall things in the economy and jobs and so forth here in our local economy. But last month in August, of all sales that happened, only 1.6 were distressed. And that is up a little bit since July, 0.8 to 1.6. But in August a year ago, and it was 0.2. So there's a little tick up. You can see that little number increasing. But this is a number that I just want you to see here. This is Americans sitting on tremendous equity. 39% of homes that have a mortgage in this country are free and clear. It's an amazing statistic. 29% of people that have mortgages have 50% equity, and then another 32% have less than 50% equity. Now that's all good as long as the rates, the prices don't continue to decline so much, obviously. So a lot of things can happen. But here again, historically, from January 2022, the number of delinquencies are on a decline, not an increase. So this headline is saying we happen to have the most number per household compared to other big cities or other cities that are being reported on. All right, so we keep you posted every month on what's happening with the foreclosure numbers as well. All right, so let's talk about what are your opportunities if you're thinking of selling your home. Now, I just mentioned if you don't need to sell your home and you're happy where you're at with your payment, then you're probably going to stay where you are and you're probably going to wait it out and you're going to see what happens if you're just wanting to move up or move down. The reality of that will be, this is the reality for sellers and buyers in any market right now, especially here in Las Vegas. The concern that I have, and that we sometimes say, that waiting to see what happens, we don't have a crystal ball, so we don't really know. But if many, many people are sitting on the sidelines, sellers and buyers, even investors, only 26% people but buying with cash. They're not all investors, but a huge portion of them are. If they're all waiting on the sidelines for certain events to happen, like the market to crash, which we don't see it happening, and the interest rates to come down, which are probably not going to happen until next year sometime, or until we get a little closer to that magic 2% inflation that the Fed is looking for. When that happens and the rates start to adjust down, what's going to happen? Everyone's going to jump back into the market. And when everybody jumps back into the market, what does the simple supply and demand say? Well, unless we have a ton more supply, which we would have if sellers now say, all right, let me jump back into the market, get my house sold so I can take advantage. I'm not going to get 3.75, but 5 point whatever. I like that. Let's go. Now what we're going to have is a crazy market where there's so many people trying to go buy the homes that the prices are going to go up again, and we'll be in multiple offers again. So who knows when's the best time to buy? I always say the best time to buy is now if you are happy with the terms and you can afford to make the payment, because you're okay with that. If that's your goal, if your goal is to invest in property, you have to look at the different scenarios. But if you're looking to purchase a home to live in it, it might be now is the right time. It might be later is the right time, but that's what I feel is going to happen as we move into the lower interest rates, everybody jumping back into the market. But here's the bottom line. If you're thinking of selling, that peak was 482. It has come down. It came down lower and it kind of came back up again. And we're sitting at 447, 435. Homes that are updated, well-maintained, and not overpriced. This is our mixed market. It has been like this all year for resale homes. If your home looks great, if it has been updated, if it's 20, 30 years old and it still has all the original everything in it, it's not going to sell as quickly, because people don't want to walk into a home and say, I have to put 50, 60, $100,000 into this house to get it to today's standard. That's just the reality. I'm out there every day. Our team is out there every day working with buyers and sellers, and that is what we hear all day, every day. So those properties take longer to sell. Those are the ones that may sit on the market longer. Those are the ones where people are going to try to get, to come down in price and so on. Not saying you need to renovate your home. I'm saying you have to be realistic about the price. Now, if you have updated your home and it's in great shape, these properties don't stay on the market very long because we don't have enough inventory and everybody wants to move into an updated home. So bottom line, if you are thinking of needing to sell or buy, just reach out to us. Everybody has a unique situation. We'd be happy to talk to you about what we can do to help you sell and move out of town, or sell and buy here, because there are opportunities for buyers. Let's talk about that. So as I just mentioned, resales peaked. Inventory increased in September with 8121. It's been declining ever since because of interest rates and lack of buyers, because buyers, again, sitting on the sidelines. So there's only 3880, and sellers not wanting to sell their homes. So there's only 3881 homes at the end of August. Just mentioned multiple offers. If you're thinking of buying and you love the house that just came on the market, so does everybody else that's in that price point looking in that area, because they're all waiting for those homes to come on the market, and they generally get multiple offers. Opportunities are coming with the homes that are needing updates. Definitely think more competition, as I just mentioned, when the interest rates come down and everyone jumps back into the market. And I just definitely think we'll be back into a multiple offer unless I just don't see where's all the inventory going to come from. I think the inventory that will come onto the market because sellers have decided to go ahead and do that will be gobbled up. I don't see a ton of foreclosures coming onto the market. So we're just not going to have this massive amount of inventory. I think we'll have enough that it'll, as long as people are coming into the market because the interest rates are lower, I think we'll see prices increase. Now, new builds. Some builders have really they've been doing it for months now, controlling their inventory releases, which allows them to create a sense of urgency and create waiting lists. So they're offering incentives, especially on the property. So they're building to sell. They're not building. Many builders are choosing not to go from the ground up anymore. They can control the inventory by building consistently, constantly releasing just so many homes on a monthly basis. They get them sold. In some cases, like we just went to an event with one of the builders where it's literally a lottery. So everybody that wanted a certain type of home in this area had to show up on a Saturday, and they drew names for the 4 lots that were available. Okay, that's not always the case everywhere, but that's one instance of what's happening with builders. And that was a builder who builds from the ground up. Now, as many of the others are building, and they're building what's called specs, quick move-ins, and that is where the best incentives are. Special financing, closing costs, below interest rates, below current 7% interest rates. If you have the ability to get in there now and close in the next 30 to 60 days, that's where the best incentives are. We have been able to get a lot of our buyers even below the list price in some cases and all their closing costs covered or a combination thereof. Be able to get them into a home or a townhome, have a special financing at 4.99 or 5.99, for example, and get their closing costs covered. So bottom line, just reach out to us. We are very well versed on all the builders across town. We have relationships. We sell a lot of new homes. We have made it our focus this year to really understand the new home sales market as well as the resale market so that we can serve all of our buyer and seller clients. And here's a couple examples that are available right now in a couple places: 5.5%, 5.79% APR, 5.5% fixed rate for 30 years. But there are certain criteria. You have to have certain qualifications and you have to be able to close when this opportunity is available. The builders are basically going out and buying a bulk of incentive packages that they have until they use them up, and then they try to do another deal. So there's all types of situations that are out there. Most builders are paying closing costs, not all of them, but most of them. There's only a few that don't pay some type of incentives, but they all have competitive incentives, and they definitely are making their sales because of the lower interest rates that they're offering. We currently have about 238 new home communities and some 22 to 25 builders that you've heard of, national builders, building here in the Las Vegas Valley. All right, that does it for the September 2023 report. I hope that information you found useful. And again, reach out to anybody on our team. You can follow us on TikTok, Living Las Vegas. We also have a Las Vegas New Homes channel. Subscribe to our YouTube channel. And we're also over on Instagram at Living Las Vegas and Henderson. Until next time, make it a great month, and we'll see you in October.